Hey, everybody, once again, welcome to another Profit Strategies podcast. Friday, March 12th, 2020. Chris Johnson, how you doing, my friend?
I'm doing well, Tom. How are you doing? How'd the week treat you?
It's really good, really good. Stock account went higher, all right? Obviously, I think a lot of that has to do with the COVID relief bill passing
Mm-hmm.
and, obviously on the president's desk. I can't give all credit to the government because I made the picks in my account that are going higher. Cryptocurrency making another run for all time highs,
Yes, it is.
and then of course there's GameStop and AMC. Their 15 minutes of fame just got another 15 minutes as these stocks are crawling out of the gutter. I have a conspiracy theory on these. And so let's talk about this news that's happening this week. Obviously, the biggest piece of news right now is the COVID bill. All right, so COVID bill, $1.9 trillion getting flushed into the economy. I would say if you look, we could sit here and offer opinion up of whether what we like about this bill and what we don't like about it.
Mm-hmm.
But Chris, that would take longer than we have for a podcast. So
Right.
I say let's just move on to what it does for the investor and what it does for the trader. I think number one, dollar going to get weaker. We're seeing a bump up in this. In over the week, we've seen a bump up in the U.S. dollar, but I think that's going to be short lived. I think that you're going to see asset prices, alternative asset prices, commodities, even cryptocurrency are going to swing against the U.S. dollar. And the dollar's going down; these things are going to swing up. And I just did a video earlier in the week that I titled "The Top 3 Alternative Asset Classes That I Own in a Falling Dollar," and those are, and they're not perfect. Precious metals, probably the laggers of the bunch. Foreign investment in commercial and residential property. Now I'm talking about farms and I'm talking about investment properties overseas, because to me, that's a 1-2 punch. Number one, you own something that's hard. Number two, you also own it in a country that has a currency that in a lot of cases runs opposite of the US dollar. So
Mm-hmm.
you've got a kind of a 1-2 kick there. And then number three is cryptocurrency. And there's Bitcoin and there's Ethereum, and these are great institutional plays. But there's also a lot of smaller cryptocurrencies that are actually outperforming Bitcoin that we've discussed as well. Your take on the COVID bill?
I'm with you exactly on the commodities. I think commodities, everything from you mentioned copper. I think one of the things nobody's really looking at are agricultural commodities. If you
Yep.
look at the DBA, which is one of those ETFs that kind of like USO, it tracks a basket of commodities. In this case, it's agricultural commodities: soybeans, corn, wheat, that type of thing. That has gone through the roof here, Tom. And a lot of people talking about inflation. This is one of the areas where you're really seeing an interesting story play out. And when I think about alternative assets, and you mentioned, land and real estate and commercial agriculture in other countries, one of the things I saw on Bloomberg maybe 3 weeks ago is that Bill Gates is the largest owner of agricultural land in the United States now.
Yep. I heard that too.
Yeah. And
When I threw those out there, so I have some farmland that my family owns in Colombia and
Mhm.
also in Panama. But there's easier ways to get into this than going out there and having to go
Oh
down
yeah.
the private road. I mean, you mentioned, one DBA and DBC come to mind. Those are long term. Deutsche Bank Commodity Index or ETF and Deutsche Bank Agriculture ETF. And those two have had a substantial increase, especially since Biden's election.
Oh
Forget
yeah.
2020 since COVID. Look at November to now.
Yep.
They're just hitting it out of the park.
Right. Yep. So that's one of those other alternative plays that I've been watching. And then, like you, Bitcoin and cryptocurrencies. We talked a couple weeks ago about some different retracement levels on Bitcoin. At that point, we were talking about, which it just cleared that hurdle between 50 and 55,000, which was kind of the test zone. according to the FIBOs. And now, what, 62, 65 next stop?
Yeah. Well, I
How
mean,
about gold, though? Gold
you
gets a little
know,
bit of a bump this week. We talked about it. We panned it last week. It gets a little bit of a bump this week. Do you see that lasting more than uh, a dead cat bounce? Because if you look at the GLD shares, so oversold right now.
I don't know. I mean, if you look at GLD, the ETF, um, I got it right here on my charts.
Mm-hmm.
If I look at GLD, let me bring it up. I got another G on the screen, GameStop, but we'll talk about that in a few minutes. But if you look at GLD, I mean, just the last 30 days, we've gone from the mid 170s down to almost the mid 150s.
Yep.
Early in the week, and we are getting a bump. And I have added to my positions in GLD. I own GLD, and I added at the 165 range, and I added at the 162 range. Now we're creeping back up into the 162 range. Now, how do I add to those? I sell puts. I sell cash secured puts, and so I'm getting a premium that helps my break even go below those numbers.
Right.
But still, I mean, when you look at what's happened in the last 30 days, I'm behind the eight ball on GLD, but coming back. But your question remains, is this a dead cat bounce?
Well,
It sure looks like one for a trader, because you see the highs earlier this week, and get that pop up, and then a little bit more and a little bit more, and it's almost like, come on, President Biden, sign that bill so we can go back down.
mm-hmm. Well, you know
But
what?
it's a long-term thing for me. I'm not trading this. I am investing in this.
Yeah, speaking of long term, I zoomed out to a monthly on the GLD, and we're bouncing right on the 20-month, which is that line of demarcation usually for a technical bull and bear market. Last time we saw the GLD break down below that 20-month was back in 2013.
Yeah.
2013. Yep. So this is kind of a crossroad for gold
and
right
I
now.
Jumped in. I mean, realize I jumped in early.
Yeah.
I jumped in early with these. I mean, I mean, yeah, I could have gone down there and got, maybe got the 158 puts and sold those, but I didn't know that
right
2 weeks ago. If I had that kind of crystal ball, we'd be having a whole different discussion here.
Well, but, probably on a beach somewhere too.
Yeah. Well, I hang out at a beach. Just maybe I'd hang out at a bigger beach.
A bigger beach.
Anyway, but I mean, the fact of the matter is that we don't know where this is going. But I look at it as an investment against the U.S. dollar, and investment against who knows what. I mean, right. When you add all these things together, no one's going to bat 1,000. I mean, nope. You look at if you're going to do baseball analogies, Babe Ruth during his time, and for the longest time, hit more home runs than anyone else during that time. But he also had more strikeouts too. I think he struck out like 7 or 8 times at bat.
Yeah, you got to swing the bat.
Yeah, and so that's GLD. I mean, and like we talked about Deutsche, and if cryptocurrency, like I said, we're knocking on new all-time highs. I wouldn't be surprised if we hit them this weekend. Because the weekends have been really volatile for cryptocurrency. And the reason why is because you don't have the CME. You don't have futures contracts trade. You don't have a lot of hedging that's going on. That's the only way you can hedge cryptocurrency that I know of is with maybe stocks like Riot, which I've done, and with the futures contracts that are traded over to Merck. So when those are off, which are off between Friday afternoon and Monday morning or Sunday afternoon, then you got 48 hours. You got a 48-hour pass for those crypto guys to just take it wherever they want to take it. So we shall see. You mentioned agriculture. So let's go down the supply chain or up the supply chain from agriculture to restaurant. Biggest news stories that I heard this week. I saw Kevin O'Leary on one of those financial networks. Mm-hmm. And everyone knows him as Mr. Wonderful. He was talking about, he was very controversial. And I do agree with a lot of what he said. He goes, you know what? If you're going to pass a stimulus bill and you're going to bail out companies, why bail out companies that have no business plans going forward, are not going to make money going forward, and are just going to flush that money down the drain and give it to high-paid executives? Why not just give that money straight to the employees instead? And he mentioned, listen, there are plenty of companies out there that were not doing so well last year that figured out a new business formula and moved forward. Now, I bring up that comment because here we are late in the week, and I see that Steak and Shake is now going to replace their table service with kiosks. So they are trying to move forward. They realize that, that yes, people are dining back in, but there's only so much, they can do as far as inside dining. No one knows how this is going to end. Brazil's got the variant right now running rampant. And so, and then there could be strains that the vaccine may not be effective to. So a lot of companies are having to retool and rethink. And so, you look at Uber Eats and delivery services. And last year, people couldn't figure out delivery to save their life. But they figured it out real quick after April. Right. And everyone got in the groove. And now delivery is a regular thing. I can't tell you the last time I actually went to a Walmart. Or the last time, I'll go to a food store, but it's like going to a convenience store for me now.
Right.
Because the new norm at our house is the stuff shows up at the front door, we bring it in, or it shows up at the garage and we bring it in. And so, and now contactless delivery. So it's there. It's here. It's been here. And so you got restaurants that have not figured that out yet, and they want to bail out, and I get it. But and then there's restaurants that can't change, like bars, and these get together places where you have to, in order to survive.
Dave and Buster's.
If you're pouring beer or you're pouring alcoholic beverages, that's not a contactless delivery. That will never be. So they will have to figure out things themselves. A lot of them have taken it to the streets. In the place that I live, Main Street, in the community, they're blocking off Main Street now.
We're doing that too.
Permanently, not just, first Friday of the month or whatever. Permanently. All the tables inside are now outside. Umbrellas outside. And so that's what some of the restaurants have done too. But what I'm saying is that you've got a clear change that's already happening and we'll see continue to happen with restaurants.
There's a trend, and I saw, and I'll on one of the podcasts I listened to, a sports podcast of all things, Pardon My Take, they interviewed Guy Fieri. And one of the things that he has done with his restaurant chains is over the last couple of months, and this has happened here in Cincinnati, he's opened up 11 ghost kitchens in the Cincinnati area. 11.
What's a ghost kitchen? Because I'm not
so a ghost kitchen, Tom.
I know Guy. I call him Guy Ferrari.
Guy Ferrari.
Because he's got that hair that's like mine, but it's blonde.
Yeah,
and
you could highlight it
more than mine because he looks like he's going 100 miles an hour.
Well, he's got that Camaro, so he may be doing it every once in a while. But so a ghost kitchen, the concept here is that you have a kitchen, a restaurant that no longer has any seating. You can either do a pickup or it's mostly delivery. So they've gotten rid of the overhead of having a seating area, a place that you have to have wait staff, et cetera, which is by far the most expensive part. It's not a producing part of the real estate, as you know. So, and it's interesting that this concept is now taking off. We have people here in the Cincinnati area that are doing ghost kitchens, but Kroger, of all companies, and there are a couple of very small OTC companies that are trading. There's one out of Chicago that trades, it does ghost kitchens, and that's all they do. Kroger is now trying to embed themselves in this business plan, almost like Cisco, the other Cisco, SYY, does in terms of providing food services to them. And I think this is exactly what you're talking about, how we're going to innovate beyond. And sure, Chewy and Etsy and those companies were great during the pandemic. Zoom. I mean, look how poorly Zoom is doing in the post-pandemic, and we're not even there yet. But
no. But you know what? Zoom is just, unfortunately, it's a victim of its own success. And Zoom as a company, as a fundamental company, it is definitely here to stay. I have moved a lot of my video webinars from another company over to Zoom because I really love the clarity. I love what you can do with Zoom. It's easy to use. The back end stuff's not so easy. I'm still trying to figure that out. But when you're on and you're clicking and doing your thing, it's very easy to use. And I was just thinking about, you brought up a really good point. So I'm going to segue into the next big storyline, and that is, I'm watching some of these bailouts. I mean, the airline industry, getting a bailout, getting some more money. And this is an industry that, honestly, long term, I would not want to put money into. If I were looking at the airline industries, first of all, their debts are just out of control.
Right.
And more importantly, the business plan is absolutely changing, whether you want to believe it or not, because that business flyer, 50% of them are gone now. They're never coming back. Look at me. I used to fly quite a bit. And then I went to started to do the online webinar format. I started flying less. Now, there's no reason for me to leave unless I want to leave. I don't have to go anywhere. I use Zoom. I use these online capabilities. And think about this. When I used to fly, I say when I used to fly, because my wife won't let me do it anymore. But no, really, I mean, I have no desire to get on an airplane and go anywhere. And so here's what's happening. And this is kind of one of my two conspiracy theories I'm going to leave with you here in this podcast. And number one is flying. So the business traveler, 50% of them are gone. Consultancy companies, because when I used to fly and I'd be in first class, half the seats were taken up by consultants. They were traveling from one place to another. And I'd talk to them. The guy says, yeah, I got a meeting here. Then I got to fly out to this place. And they did these Monday through Friday hops where they go to a different city each day, sell whatever product it is they have. And then on Friday night, they were back home, all ready to get back up and do it again. And I said, do you like what you're doing? And they said, well, yeah, I do. The pressure's hard. I said, but you know what? The guy said to me, he goes, if you want to make a six-figure income in this industry, you got to get in the sky. You got to get to the client. That's not the case anymore, because what these companies are doing is they're grounding these guys and they're saying, you know what? Do it online. Do it online because it's easier for you, but do it online because it's cheaper for me. Because if I put you on a terminal like you and I are talking right now, Chris, you're in Cincinnati, I'm in Sarasota. I mean, we're 1,200 miles apart.
Right.
Yet we're here live, real time. Consultants are doing it now. They're selling their products and services, one Zoom call after another. And instead of it taking 5 days to land 5 clients, it's taking 5 hours to land 5 clients or renew those clients for their buying practices. That's going to hurt the airline industry, and I'll tell you why. Because that business traveler is who they all geared for, the big ones, Delta, United, American. They all geared for the big traveler, that business traveler. They all knew they'd pay premium seats. They'd either sit up front or they'd make a ticket 24 hours before they had to leave, and they were paying the highest price fare.
Exactly.
Those are gone. They're gone. So those are gone. And then, so they're being replaced. I mean, you're hearing air travel is going to be up 40%. And, we discussed that, I think, a week or two ago, and this whole buy the rumor, sell the news thing that we've tossed around, you and I. But here's the thing. You're going to replace that business traveler that would pay $1,000 to get somewhere if you gave them the option to do it tomorrow, with someone who's going to take a flight to Orlando for Disney World, or they're going to go out to California, or they're going to go to Vegas, and they're going to pay anywhere from $29 to $99 for that trip.
Yep. Because
they're going to book it weeks, if not months in advance. And they're going to book the lowest class fare that they can find.
And non-refundable. Shop the hell out of it.
And United, American, and Delta are going to have to compete with the likes of Frontier and Spirit. And, are they still even around?
Spirit, yep. SAVE, yep.
Yeah, so, and they already do the low class fare. I'm amazed these guys haven't started charging you by the pound. Like a freight, because they literally are one small notch above FedEx and UPS.
Right.
because they treat you like a package. They don't charge you like a package yet.
Well, God, Tom, you know
They
what I
don't
just
say yet.
remembered? I just remembered a couple years ago they were talking about redesigning the seats so you would almost be standing up so they could get more
Yes.
people on the plane. Now, maybe we should thank the pandemic a little bit because there's no way they're going to start doing that anytime
No.
soon.
No, but they're going to talk about circulating air, and they're going to talk about, this whole, wearing your mask. I mean, I can't imagine. It's going to be hard to wear an N95 mask on an airplane from wheels up to wheels down.
Yep.
It just, how do you do that? I mean, I walk through a Home Depot or a Lowe's if I'm grabbing something. I got that mask on, and I'm telling you, I'm going like this every once in a while when nobody's around, just to breathe in some cool air. But okay, I'm going off topic. So here's the thing. United is very close to making new highs for the year.
Yep.
And I see this as a bearish opportunity. Now, my other conspiracy theory, and let's move forward into this topic, and that's the revitalization of GameStop and AMC. It's its counter company, and this is the Reddit community, which is now taking storm again. And if you saw earlier this week on the 10th, we had this huge move up and down in GameStop. At one point, GameStop was near $350 a share, and then 30 minutes later, it was trading down near 170.
Yep.
And then it recovered right dead in the middle. And now it's quieting down again, but it looks like it's getting ready for that big move. Here's my conspiracy theory on GameStop more than anything else. All right. So Biden signing the agreement. Checks will start going out next week.
Right.
Folks that get them by direct deposit will have them very soon. There is a study that's gone out that says that I think it's nearly half of folks that are getting a check are going to deposit some, if not all of that money in their brokerage account and throw it into the markets and throw it in all on black or all on red, or in this case, all on green, they're hoping, with a company like GameStop. And so, guys, I got to tell you, if you're an option trader, volatility it's not as high as it was back in January, but I was checking earlier this week, Chris, I was checking strangles, an option strangle. And an option strangle is the ability to sell an out-of-the-money put and an out-of-the-money call and put yourself outside of the action. And what your expectations are is you're looking for that premium to decrease to zero, and you take that premium in. Now, there's a risk there, and the risk is unlimited if the stock gets out of that range. Let me tell you what I saw on Wednesday with the big move that was happening.
Mm-hmm.
So this stock was trading around $250 a share. I was looking at the 150 puts and the 800 calls. They actually went as high as 800 that expired Friday, today. $6 they were offering for that option. On Wednesday, it was a 2-day option expiration. $6.
$6.
I thought, you know what? And I was going into, there's another story behind this. I was looking at, can I sell naked puts on this? And my broker wouldn't let me. Could I sell naked calls on this? My broker wouldn't let me. Could I sell ratio spreads to try to neutralize my time? The broker wouldn't let me. Said, call my representative for more details. What was I going to do? Pick up the phone to listen to a representative tell me I couldn't do it?
Right.
No, the online message I got was good enough. So what I did find out, however, is that I could sell strangles. It was going to let me sell the strangle. So really? I priced together 10 of them. I said, you know what? I'm going to sell 10 of these because these are so far out of the money. 10, $6,000 income in 2 days. Really high probability of keeping that, and I can manage that.
Right.
Then I got to the preview section, and I saw the margin requirements. Now, the margin requirements for GameStop, selling the 150 put and the 800 call.
Yep. Looking at the chart.
They wanted $80,000 per contract. I was going to try to sell 10. So to bring in a $6,000 premium in 2 days, it was going to cost me $800,000. So I said, no, thanks.
Sayonara.
And moved on. But, you look at this and really these type of things, and here's my conspiracy, guys. Again, it's, the great thing about podcasts is we get to kind of shoot the, live here.
Yep.
But sometimes I go off topic. Here's my topic. My conspiracy theory is this: buy the COVID signing, sell the COVID check. When the check gets in the mail and the check is deposited into the Robin Hoods and the Weebles and of the world, and that money gets deployed out there in the stocks like this, I think that's the next bubble.
You think it's just on these stocks, these meme stocks that everybody's hearing about? Because I think that's where the money flows from.
I think that could be the tail that wags the dog. But again, I'm talking about a small group, but it could be just to this small group. But you got like, you look at some of the stuff that's going on, Chris. You got NFTs out there, the ability to trade LeBron James tweet, or to own a tweet, or to own a soundbite. And these things are going for like millions of dollars now. I mean, this is the Beanie Babies. This was the Beanie Babies back in the 1990s.
Exactly.
We're seeing it happen again. And yes, you can monetize a soundbite better than you can monetize a Beanie Baby. I agree with those of you that are thinking about that. But, I mean, money's getting cheap. Money's getting to where people just don't recognize its value anymore when you can throw it away at things instead of paying off debts. So that's my conspiracy. And so,
I'm with you on, especially on these meme stocks, because I think at some point let's face it, the Reddit run in its current form is going to, you mentioned the tail wagging the dog, and we used that phrase a month ago, I think, when we were talking about GameStop, because its effect on the short sellers. That game doesn't keep playing out the same way very long. Yeah. The market adjusts to it at some point, and as you know, anomalies you find a way to normalize some of these anomalies. That's what I wonder if it's going to happen with some of these stocks. If there's truly going to be, you get into the point where they're going to be, I use that term, crowded trade. GameStop's got to get crowded. No matter how much somebody says they've got diamond hands, I don't care. Every once in a while, you want to put a diamond in your pocket.
And you know why this is so volatile? Because the shorts out there are actually creating synthetic shorts now. And the leverage on the short side of GameStop with all the synthetic shorts, with all the synthetically short stocks, is somewhere between 300 and 500%. It's still out of control.
Right. And
the only way to really rein this in is if the regulators, not the regulators, I mean, they don't do anything except in a lot of cases cause more problems for us. Right. But the exchange, the clearing firms, need to bring a stock like this down to 1-to-1 margin. Just basically get rid of the margin. You go cash on something like this, and that'll shut it down. And that'll shut down the craziness. Until then, it creates opportunities, but it creates opportunities for folks like me that eventually can't do anything about it because our brokers won't allow us to. So if my broker won't allow me to seize an opportunity or is going to charge me some crazy margin requirement to do so on the options, why not take the margin away completely and the synthetic margin away?
It's a great point.
To really calm the stock down. All right. So speaking of high volume and high interest and high priced options, I want to end this segment, Chris, this week with a report that I am working on. I'm working on putting together something, and it's either going to be in app form or it's going to be in report form or something. And I'm trying to come up with a catchy name. So I got this catchy name, and I'm thinking about calling it the opt-in report, the options interest report.
Gotcha.
So you have to opt in to get the opt-in report. And the opt-in report, I'm looking at, and right now it's in alpha. So, me and the programmers are playing around with it. But we're looking at things like going into earnings. All right. The options that have had the biggest run up ahead of earnings, the options that have had the biggest run up in price, the biggest run up in options premium and earnings. But we're also looking at, we've talked about expensive options and cheap options, and we're looking at something like that too. But then we started going in and saying, you know what? How about the options that have the actual options have the highest option value? Like right now, if you look at on almost any given day, Tesla's in the top 10, Apple's in the top 10, GM's in the top 10. But you know who else is out there? Ford Motor Company this week is in the top 10. And we're talking about options that are, like I'm looking at my screen right now. The March 12th, 13 calls on Ford. That's the ones that expire today. Well, there's 35,000 contracts that are trading around the 14-cent level. That's what I'm talking about in terms of, I think, why. But someone's looking for that option to maybe either blow up, or when I look at the highest amount of open interest, and that's the amount of options that traders currently have an open position on that they've not yet closed. Ford also comes up this week. And I'm looking at Ford and I see that this is an interesting one. The 2022 leaps, all right? The January leaps that expire in 2022, the 10 calls. There's over 250,000 open interest on these that are trading, and that stock's trading just below $4. That's for the 10 call.
I'm looking
now, Chris, I'm going to just throw this out here for you. Ford's been an interesting play here recently. You started talking about it. Throw your 2 cents in on Ford.
Well, Ford is they are the old dog learning new tricks between them and GM. GM obviously made the run for Nikola and said, we're going to change everything up and go EV. Everybody's going EV right now, Tom. And Ford is actually, whether it's the Bronco that they're putting out there that's all electric, whether it's the Mustang that's all electric, they are showing that they're actually moving faster right now towards us. So I think when you look at Ford as...
And Ford picked Rivian. Remember?
What's that?
Ford picked Rivian.
Yes.
And
yes.
I really love the Rivian concept. I just don't know if it's, part of me doesn't know if that was the right pick. But then when you look at what's selling out there in terms of vehicles, it's really just large sedans and pickups. The days of the SUVs, the days of the 4-door sedan are limited. I mean, they're just not selling. Nope. You got to be in one of 3 categories: sports cars, SUVs, pickup trucks. That's what's selling right now.
And they got it all. They got all 3.
And so when I look at Ford, and let's close with this. There's so many things I'm looking at on the screen. Like I said, I could just go on forever. But Ford is number 1 right now in the highest open interest that I'm looking at. Ford is number 1. And it's these leaps. It's not something that's expiring today or next week or next month. It's something that's expiring next year. And where do you see Ford priced at right now, Chris? Where's Ford?
Where do I see the actual price? It's at $385. Yeah. Well, no. The actual price, what you're trading at... oh, gosh, I'm looking at all the options here, Tom. You got me.
Did I catch you?
I was looking at that January 10, and that's trading $385, and it's got 1,400 contracts trading on it. You're at $13 right now.
Yeah. So Ford is trading, like you said, around the $13 level. Right. So on first glance, when you look at those options that I just talked about, where you've got the 10 calls trading for $395, on first glance, you might say, man, that's a lot of premium. That's nearly 40% of the premium of the actual option. But when you price in the fact that Ford's trading at $13 right now, you take out $3. You're talking about really there's only about 95 cents, of real value of time value in that option. That makes that a quality pick. So there's a few people out there that are thinking really well. They've got themselves $1 worth. You look at Ford and you say to yourself, all right, so if I buy the $390, if I buy that 10 call, I've got some real money, and now I'm not paying $13, but I'm paying a fraction of what I had for the stock, and it's in the money. I can take the stock if I want. I've got a year to be right. And if Ford goes up even a couple of dollars, I've got a 40, 50% return.
You know what I think's ironic about this, Tom? What we're talking about is a stock replacement.
It's exactly what it is.
And we're talking about it on a $13 stock. Nobody usually thinks about replacing a $13 stock. They just say, well, the hell with that. I'm going to go out and buy it. But this is, when you point that out, with the 95% premium on a $4, almost $4 option, because you've got that $3 in intrinsic value right now. Why not? Everybody's in the over-the-counter market. This shifts back to the conversation we had a couple weeks ago about the over-the-counter markets lighting up because everybody likes getting into the penny stocks. This is another way to make a low dollar stock a lower dollar stock, and it's a great trade.
Absolutely.
Yeah.
So, Chris, let's close it up. Thank you very much. Hey, happy St. Patrick's Day to you, because I won't be talking to you again until after. So enjoy your St. Patty's Day. And everyone else, same to you. Enjoy your upcoming weekend. And we'll see all of you again on our next podcast. Till then, take care. Bye, everyone.
See you, Tom.
See you, Chris.